Oil prices rose on Tuesday as investors worried about tight global supply. Libya has halted production at its largest oil fields and suspended exports. The OPEC members' oil output is expected to be halved as protesters force the closure of major facilities. Factories in Shanghai are also reopening, propping up demand from the world's second largest economy. Both the international benchmark Brent and WTI are up by about 1%, marking the 8th day of consecutive gains for oil prices. Let's get more on this now with Naeem Aslam in London. He's Chief Market Analyst at AvaTrade. Many thanks for being with us today. Naeem, first of all, how significant are oil supplies from Libya? I mean, how much of an impact can we really expect if Sharara, but also El Feel and other oil fields were to remain not operational in the coming days?
Sure. Thanks for having me as always. Well, we don't particularly pay too much attention to Libyan output. Yes, of course, there is that sort of an output which is kind of helping, but the more important numbers that we pay attention to was the OPEC's overall production. Is it above its current estimate or is it below? And the recent headlines suggest that OPEC has actually produced 1.45 million barrels of oil below its target. And that is the number that we really need to pay more attention to. Now, of course, this is not the only matter which influences the prices the most, because we have other factors. Like, for instance, earlier headline broke out that, okay, now the conflict between Ukraine and Russia have gone into a second stage. Now, we all know geopolitical tensions are only and only moving oil prices in one direction only, and that is to the upside. So these are the factors for us which matter the most, then considering for smaller countries and what their productions are like.
Right, and expanding on that, I mean, you are saying only in one direction, but how much further do you think these crude prices can really grow, also considering the strength of the dollar at the moment?
Sure, I think that's an excellent question, and you can find the answer by looking at the recent data from the futures commodity data, and what it suggests is the hedge funds have actually reduced their bullish positions. So despite the fact that, yes, oil prices are still very much maintaining their trend, but I think the chances of oil prices reaching towards their previous 13-year high price level of 128 are still a kind of a minuscule. However, if the conflict between Ukraine and Russia flares up further, then certainly we could see oil prices ramping up and then once again retesting or going beyond that particular price level.
Naeem Aslam, many thanks for being with us today.